All right, so let's begin the show. And today we turn our attention to a pressing concern of investors, the recent performance of small cap mutual funds in 2025. Now, talking about small cap funds performance, we'll also flash some data on your screen. In 2025, small cap funds so far have faced significant challenges. Now, if we talk about returns, with returns dipping sharply, some funds experiencing losses of up to 18%, and the average return across the category standing at a negative 11.7%. Now, what does this mean for your investment strategy? Should you view this correction as a red flag or a potential buying opportunity? In today's segment, we'll delve into the factors behind this trend, analyze expert opinions, and provide insights to help you make informed decision about your portfolio and your exposure in a small cap fund. I have with me Ajay Khandelwal, Fund Manager, MOFF. Hi, good evening, and welcome to the show. Ajay, my very first question to you is, just talking about the category first. Small cap funds have delivered negative return of up to 18% in 2025. Now, what are the key market or macroeconomic factors behind this sharp dip in these funds?
So, good evening, and thanks for having me on the show. So, I'll just give you a backdrop about small caps. If you look at the last 3-year and 5-year performance, the 5-year CAGR is still north of 35%, and even 3-year CAGR is north of 25%. So, considering that that we are coming after decent performance of 3 and 5 years, starting this year, there have been few events that led to uncertainty. So we know about how tariff uncertainty came. And before that, I think last 2 quarters, there's been a cut of almost 5 to 7% in earnings. Now, this also led to currency volatility. So unleveraged positions got taken out of the system. But generally, what happens is when this kind of uncertainty is there in the market, small caps normally see this kind of price volatility. But now when you look at this result season, most of the small caps have made a comeback wherever the results are better. Clearly, those stocks are seeing the price appreciation based on fundamentals. So I would say that starting of this year, because there is uncertainty in the market, it led to price volatility. But now when fundamentals are coming back, the stocks are actually showing the price performance based on their business delivery.
Over here, I also want to understand, Ajay, now since you've spoken about the results and how the category stocks are including all of that now into the picture. The average category return is down by over 11%. Now, does this also indicate a structural shift in small cap valuations? If I have to really ask about valuations, how is this shift looking to you then?
So, valuations, we look at valuations vis-a-vis growth rate. For example, when we say valuations are expensive, ideally it should be seen with respect to what is the underlying growth rate for that industry and for that company. For example, large caps, if they are growing at 10% and they're trading at 20 kind of PE, the price earning to growth is almost 2x. So if we look at small cap where the earning growth will be north of 15 to 20%, and if they're trading at around 25 times, they are actually trading at less than 2 price to earning growth ratio. So that is one thing. Secondly, even if you look at the overall valuation now after this correction, the valuation has come down. So 1 year forward, small cap is trading at almost 23, 24 times. Nifty is trading at around 19, 20 times, and mid cap is still trading at 27 times. So I think a lot of that price correction has happened. I believe we are still in that earning upgrade cycle for small cap, especially for the industries which are delivering in terms of cash flow, in terms of their volume and revenue growth. So those businesses, I think, are fairly valued. And I think we are very comfortably placed at this point in time.
We know one question from an investor's perspective also, Ajay. Now, many retail investors, as we all know, entered small cap funds during 23 and 24 bull run. Now, do you think this correction, so-called correction, is a healthy reset, or could it lead to long-term disillusionment?
I think investors need to invest in small cap with keeping in mind that at least they need to stay there for 5 years, because these kind of volatility leads to this kind of price performance. But again, as I said, if you look at the 3 year and 5 year CAGR, small caps have still delivered more than 25% and 35% for that matter. So I think given where we are in terms of there are so many industries which are coming up in small cap, whether you look at manufacturing, whether you look at any of the capital good value chain, textiles, EMS, a lot of these stocks, they fall into small cap category. And I think the growth rates for these industries will be structurally higher. So according to me, small cap in India will continue to deliver healthy earnings, and eventually that will be reflected in stock prices. So I think investors need to come to small cap thinking that there could be volatility, but eventually they will be rewarded.
I want to understand the functioning of your fund now, Ajay. I mean, looking at the returns also, negative double digit. What, according to you, has been the philosophy or the theme of your fund, your small cap fund, that did not work in this particular market movement, and why?
So just to give you some perspective, I think our NFO was launched 1.5 years back, and we are still delivering almost 35% absolute return. Even YTD, our returns are positive. It's just that calendar year, because index has fallen, there's been volatility. So the return for that time period is negative. Overall, during this fall, what has not worked is that some of the sectors, for example, apparel, defense-related names, where I think there was delay in order book. So there the price correction happened. But if you look at last 1 month, I think everything has come back. So I think by and large, there's been overall market which has come down. Even in large and mid caps, there's been some bit of correction. So small caps, it's just that because during uncertain times, there's larger volatility in small cap. That is why that price action is more pronounced in small cap. But how we are placed is that we like sectors where there are structural earning tailwinds. So we are into renewables, as I said, grid automation, manufacturing, healthcare. So these are some of the themes where I believe earnings will be delivered for next 3 to 5 years. And I think that is where we are placed.
So, Ajay, any changes in your fund strategy or exposure levels to mitigate the recent volatility specifically that you can highlight?
So in last 2 months, I think we have cut down on our allocation wherever there's been underperformance in terms of business delivery. We have bought more stocks which are more exposed to domestic consumption. So for example, NBFCs, some of the discretionary spend and manufacturing, especially where we are seeing that order inquiry is improving. Textiles, for example, where after the signing of the treaty, we are seeing that the business inquiries have improved drastically. The managements are looking to improve their execution capabilities, adding more capacity. So these are some of the sectors where we have made changes, added to our existing allocation.
All right. Now, because we talk about small cap, the universe is definitely very huge. As a fund manager, you have the flexibility to, pick up the kind of stocks and companies which are growth oriented or maybe value oriented, depending on the kind of theme you followed or the philosophy you followed in the fund. Now, which sectors within the small cap universe, according to you, are holding up and which are dragging the performance down?
So interestingly, in this quarter season, actually there have been sectors which have not performed for last 1 or 2 years. They are doing well. Some of the commodity and cyclical sectors have made a comeback, which is actually good for the businesses. But if I have to think of it, which are the sectors which are going to do well, there are still small cap IT which has not done anything. Some of the chemical names, they have not done anything. Building material, cement. Some of these sectors are actually yet to see improvement. Where we are seeing the continuity of demand is, I think, again, solar, wind, renewables, grid automation companies, healthcare, diagnostics. I think there the demand is holding up well. So we are looking from the perspective that which are those sectors where now finally tailwinds are coming and sectors where we see the demand continuity. So from that perspective, I think these are some of the sectors where we see healthy demand.
All right. Ajay, I also want to understand how are you managing the liquidity risk now, given the inherent volatility and low trading volumes in small caps? What are the stakes over here, and how are you taking care of it?
So, as a fund house, we are very cognizant of liquidity as a challenge. So, most of our scripts that we hold are above 3,000 crore market cap. And we look at what is the average volume and how much number of days of volume participation we need to liquidate any kind of position. So, that is one thing where we are extremely careful. Secondly, generally in result season, if you look at the volatility is there, but the volume increases for small caps. So if you invest in a certain market cap, liquidity is not a challenge. At our size of around 4,500 5,000 crore AUM, we don't see that as a challenge. So I think we need to make sure that we are, when we screen ideas, we look at those kind of stocks where there is enough volatility, there is enough liquidity. So I think we are not finding it as a challenge at this point in time.
Ajay, are you making tactical allocation towards mid or large caps within the mandate to protect downside, and what would that be?
So generally we run around 70 to 75% small cap, 20 to 25% is large and mid cap. And we don't take too many cash calls. So that is the kind of allocation we generally run. But irrespective of market cap, we try to look at businesses which are leader in the industry where they are generating enough cash flows. So without compromising on the quality, we look at that we have to bring the best companies in our portfolio. But by and large, we run around 70 to 75% small cap and 20 to 25% kind of mid and large cap. And our liquidity of the portfolio is extremely well. So yeah, that's not a challenge.
Fully invested in cash right now?
Sorry?
Are you fully invested? Are you sitting on cash? What's the status?
So we have around 8 to 10% cash right now, but that is also a function of inflows. Plus, because of the result season, we have exited a couple of positions and we are looking at our idea pipeline. So we'll be deploying pretty soon.
I know you can't talk about return expectations, Ajay, over here, but on an average long-term expectation, maybe 1 to 3 years from now, what should one expect from a small cap fund?
So I would say this correction actually has come at a backdrop where things are turning positive every passing day, whether it is inflation, whether it is interest rate scenario. We are expecting interest rate coming going forward. The raw material prices have come down. If you look at oil, some of these packaging costs, which are higher for manufacturing companies, the discretionary consumption, which will improve given the tax rate cuts, the capex towards rural and urban, that is also finally working well. So I don't see that earning, especially cut, will be there in mid and small cap. And given that the typical earning profile is between 15 to 25%, I think if stocks deliver the similar kind of return as per their earnings delivery, I think that is what should be a reasonable assumption.
All right, Ajay, it's time up for me on this particular segment today, but thank you so much for taking time out and helping our viewers understand the current trajectory of small cap as a category and your funds also. Thank you so much.